Oops. Okay. Figuring this out, everybody. It's only my second spaces. A lot of people joining. I invited JC and Fred Wilson to talk markets here. Maybe Jeff Richards will join me. I highly recommended Jeff Richards' podcast that I did, Panic Podcast. And I am recording this. To invite people to your space with a message or just share a link. Hang on, everybody. Where is JC? All right, I'm going to take some questions. Hang on. I got 2 requests here. I'm trying not to take anybody until JC. Let's invite speakers. I'll stir charts. I tend to speak. All right, let's just see. Jason Kalkanis. All right, Jason, you're on. Can you hear? I can hear you. Can you hear me? Chris.
Yeah, it's Jason. What's up, man? What's up, man? Can you hear me now?
Is this Pedroza or Jason?
It's Jason. What's up, brother? How you doing? I just got off the mountain.
Oh, it's Jason Kalkanis.
What's up, brother?
Have you changed your haircut? Yes, have you changed your haircut?
I'm going for a mullet. I decided 2022, year of the mullet. I'm going to try to go for the mullet. Probably the last one in this lifetime. How about you? Still bald?
I am fighting. I got to be honest. That's pretty funny coming from you. But I've pretty much kept my hairline, Jason. Listen, you've got.
Are you not going quietly? Not going quietly into that night?
Don't make me block you. This is a rare opportunity. I'm trying to get Fred Wilson here. He may show up.
Block me? Who the fuck are you, Mark Andreessen?
I didn't block you. Can you hear me, Jason? Fuck. How does this thing work? Jason.
You keep muting everybody. Okay, Boomer. It's called First Spaces. You can figure this out.
It's only my second. It's only my second one.
What I was going to say, are you blocking Jason, everybody like Mark Andreessen?
No, Mark, I can't figure it out. I can't figure it out. I'm a fan, but I miss him on Twitter. So tell me what you're seeing here. What are you seeing? The disconnect between the private markets and the public markets right now is at all-time highs. The public markets repricing everything, and lunatics are still paying 20, 30 million free for deals. So what are you seeing?
It's calming down. I think if you closed your round as a startup and you got a $50 or $100 million Series A, or you did a 30 or 40 or even $20 million seed, I'm seeing that slow down a little bit. And people are starting to think about price again. But it doesn't mean they're going to turn down deals. But definitely there's a little bit more questioning and diligence happening with these $20 million, $30 million valuations before the product's launched. Unless you're a serial founder. If you're a serial founder and you're Evan Williams or you're Travis or whatever, you can command 30, 40, 50 million. Sure.
Okay, but that backfires too. Even if you can, do you? Say you were going to start a great idea that you had.
Yeah.
Right? You're going to go one more time. And you could raise at 30 from a group of angels or at 15 from your favorite VC.
I would fund the first $1 million myself and basically get rid of the A, get rid of the seed, and then just go straight to the A, which I think is what a lot of serial entrepreneurs are doing now.
Okay, serial. But say you don't have. Say you're a sought-after entrepreneur who comes to you.
Yeah.
And he said, "I'm going to get Norgard up here too." But a sought-after entrepreneur that comes up to you.
Yep.
And you got to give them advice, and they say Fred Wilson's going to do 2 on 15, or I can just go to and do a 50 million note.
Yeah, I mean, if you had those two choices, I would go with Fred and just
let's say 30 million.
Yeah. So let's say it's 30 and 15. I would go to Fred and say, Fred, let's split the difference, and he would probably say yes. That would be my strategy, which is you want to have
good strategy. Yeah,
you'd want to have the adults who've been to the rodeo before on your squad, on your team, in your board. I'm old school now. I like governance. I like a plan. I like a strategy. And I am seeing so many companies in my portfolio, typically entitled founders who refuse to have boards, governance. All of a sudden, they flip the car and there's nobody to help them get it out of the ditch, right? And that's you've seen it yourself, right? I'm like, who's leading this round? They're like, nobody, you, I don't know. And I'm like, but you're raising 4 million. Who's in charge? And they're like, well, we have a 250K check and you're 500, so I guess you're the lead. And I'm like, well, who's on the board? And they're like, yeah, no board. I'm like, really? Is that a good idea?
The do you feel a crash this year? Like, I know you don't talk about stocks, but like I feel
Oh, yeah, this is the crash. It's just that the crash is being not equally distributed. There were a series of things, and you've talked about this over and over again, the Pelotons, the Zooms, the people who DoorDash who were given massive premiums during the pandemic. People realized, wait a second, does that make sense? No. Okay, so let's reprice that. And now Peloton is looking good, right? Like maybe Peloton, at 7, 8, 9 billion, maybe there's a play there. So it's just a repricing. And then crypto obviously is going to go through a repricing because most of those projects have no actual value in the world. It's just gambling and speculation. So I just think it's repricing. You don't see, I think, the Disneys, the Amazons, the Apples, the Googles, the Facebooks, even the Ubers, the, Lyfts, Airbnbs, they're not going through the same repricing because they never got priced up, ridiculously in terms of their sales to their valuation. It's the people whose sales to valuation got out of whack that I think are getting the haircuts now. That's my thesis. And then I think you're going to start seeing the bargain hunting start again, where people go, okay, now this is repriced. Maybe Robinhood, maybe Peloton at this price is the right price, right? Yeah.
So let's talk. I've sold some Robinhood on the way up, not on the way down. Did you ever sell any on the way up?
No. I'm holding for 10 years. I don't see a world in which they don't have 50 to 100 million members in 10 years. And I don't see this generation all of a sudden being less savvy and less interested in personal finance. And I don't see a world in which great product founders don't keep adding great features that delight customers. So, I like to hold things in decade-long increments, and, Uber and Robinhood and Calm, like I'm in for the second decade of each of those companies.
Yeah, I feel like Robinhood at 50 billion, I was excited to sell. I sold some on the way up at 30 billion and 5 billion and now at 15 billion, I look at the world. I can't really write this on my blog, and I'm not looking to start fights, but here I don't care. Because I can speak without getting out of context, and you were riding the whole way up. I think with me, is that the private market is what's off. It's like, okay, Robinhood might be worth 10 billion or 15 billion, whatever, but I'll take it because I got 20 million users. But the Publics and the Wealthfronts and the Betterments and the Titans and the Acorns, which may have great products, they don't have a business model, and they're paying for customer growth. And I don't see when do those, like, what happens there? Have you thought about those things? Like, so I'm saying Schwab at like $90 and at 120 billion and Robinhood at 15 billion versus one of these knockoffs at $1 billion. And I'm laughing going, they've made this so obvious that Robinhood and Coinbase are going to be the U.S. winners here. Do you think it's Robinhood, Coinbase in the U.S.? Oh, did I lose you?
No, I'm still here. Yeah, I mean, it's public markets, I think right now, because of all the stimulus that was put in and all the new entrants are like going through this turmoil where it's going to take a while for it's kind of like a real estate bubble where like the sellers have to capitulate, then new buyers have to show up, and a new equilibrium has to be reached between the buy and the sell side. And I just feel like, it's like the same thing with Bitcoin or Ethereum and Solana and all these things. Like it's just going to take a while for actual value to be determined, right? And if people are betting, this is like one of the things with the SPAC movement and people deciding that a private company should be traded in a public equity. Like, are public equity buyers, do they have the same tolerance that we have as private market investors to just wait 5 or 10 years for a product market fit moment to happen and for market uptick to happen, market pull to happen, right? And I have Desktop Metal went public, and you have countless of these EV companies, and like I just don't think the public, they're checking their stocks every day as private market companies. Like we're looking at the product every week, we talk to the founder every month, but man, we're patient, right? And we're thinking, let's get 100x in 10 years, and that's not how the public market works, right? I just think these SPACs, people bought them thinking they were buying Google or Facebook as a public company. It's like, no, these companies don't even have product market fit yet. They don't have market pull yet. Like, do you even know how this works? Like,
well, so far
it's going to be struggling in the wilderness.
But your all-in partner is part of that. I have a SPAC, so I mean, he knows better too. We all knew. Like Virgin Galactic doesn't have product.
Well, at least they have pre.
But so far,
they have all those pre-orders.
Open Door has product market, but do they have a great business model? We don't know. The meme economy. So Tesla versus AMC and GameStop. I think the meme economy, which is a documentary that I'm executive producing, which is a cool name and has grown on me, is here forever. But there's two levels of it. There's the Tesla, which has got a real product, and then there's AMC and GameStop. And there's Hood, that's part of the meme economy, but has a real product that's loved. Obviously, they have a lot of enemies, but loved. And then there's AMC and GameStop. When I say meme economy, what do you think? And then I'm going to open it up to some questions.
Yeah, meme economy to me means these new market entrants are enamored with that brand or with, the mission of that company. And they want to use their money and use their ability to sway public perception, just basically use whatever assets they have to create a fait accompli, manifest destiny. They want to force the outcome, right? And so in a case of AMC or GameStop, that might be really forcing it, right? Like that's a dangerous, crazy game of chicken. When it comes to Robinhood or Tesla, it's like, okay, both are award-winning, amazing products, amazing teams. So, it's fine that they're behind them and they want to do whatever it takes to beat Tesla Q, or they're enthusiastic about it. But at least, as you're pointing out, they're real products and services that people love. AMC and GameStop, to me, that's like, I don't know if you ever played that poker game called Guts, but I've been involved in some of these games, and everybody has to put a chip in their hand behind their back, and then if you have the chip in your hand, that means you're going to match the bet in the pot, and then like 3 people have the chip in their hand. Okay, everybody's got to match the pot. Now, do you want to get out or not? Like it's a crazy game of suicide that I don't recommend playing because somebody's going to be left holding the bag in those cases. So be careful. Not all meme stocks are created equal, as you're pointing out.
Do you have any questions for me before I open it up?
Yeah, I mean, are you working or golfing? I mean, what's going on? Is this like retirement or you're like, what is this? What is this existence that you have? I mean, just fucking retire.
No, but hang on.
Or fucking do some work, man. What is it?
Hang on, I owe you a call about some media stuff that I'm working on because you're actually good at that. But
okay.
the first...
I get lucky sometimes.
The first thing is, I went to Tom and Gary, my partners, and I was like, I'm going to take a sabbatical. And they were like, first they laughed, and then they were laughing because, yeah, we see your Twitter feed and whatever. And then they were like, wait, what do you fucking tell you can't, first of all? So no, like I think for me, what 56 years old means is I've got more going on than ever, but I'm trying to prioritize. I don't know, how old are you?
I'm 51 now, which is just crazy to think how old you look compared to me, and that's only a 5-year difference.
Go have your own
crazy.
Twitter space if you want to insult me. I'll come and you can insult me. But hang on.
Come on, it's a shtick. It's a shtick.
So listen, I'm working harder than ever.
You had to reprioritize. Yeah.
My daughter works at Rally Road, which you passed on, and
such a mistake.
They really are humming. I was on a board call today. They really have a big opportunity. But it took a while, right? Like you were there early, but it took a while. It wouldn't have been pretty for a year and a half.
Yeah.
But the joy that I'm getting from like Alpaca, Rally Road, Koifin, StockTwits, now that Rishi is running it profitably, and from like GoTrade, which is like Robinhood of Indonesia. So the things that I love doing, I've never loved doing more. The things that I don't like doing, I've never liked doing less. So I'm trying to figure out how to do the things, which that's the true gift, is to be able to do the things that I like to do most, which is I'm invested in, we did a Farfetch of cycling company. So it may not be like $1 billion idea, but if you do the valuation right, it can be a multi-$100 million idea and go into other verticals. And I'm looking at, I couldn't lead a golf deal, but I'll do golf deals personally because you know what I mean? So I'm starting to just go back to the things that I like to do, which makes it better. And at the same time, and sitting on my hands. So last year, even though it looked like I wasn't doing anything, sometimes doing nothing. Like Fred has taken years off where he just wouldn't write checks because he didn't like the market or the entrepreneurs that he was seeing. So I don't think it means sometimes not working is working, and I'm not making an excuse. Sometimes just staring at your screen going, I haven't seen a deal that I really like, and a lot of it has been price, means that maybe golfing is the best thing you can do. And by the way, golfing hurts me more than anything else, meaning once a week would be a lot for me because it's just more physically nightmarish for my back than cycling is. So any other questions?
Yeah, ruthless efficiency. No, I think ruthless efficiency and delegation, is the solution. And then there's no problem taking a pause. I spent the last 12 months focused on primarily, and 80% of my time, getting our existing portfolio companies cashed up, fully funded, securing the bag, and 20% of private investments because I didn't like what I was seeing in the market. So yeah, I did pick that up from Fred as well, who taught me that lesson. So no other questions. Great to spend time together. I'll let
Good
you.
Good to see you. I'm going to let some other people ask market questions.
Okay. Yeah, of course. Great job. Bye.
No, I'm not sure other people can ask me, but put up your hand and let me invite a group of questions. And I want to have Steve Strauss and really start talking about the market here a little bit because it's really important here as I thought through this about 3-4 months ago, I was lightening up, because I was trying to time the market just because I didn't like stuff. And the stuff that I held, I'm still getting punished on and debating about backpedaling even further. So I wanted to talk to some people about the markets, and I'm getting so many requests. So I'm just going to invite some people to ask questions to me, and hopefully I can clear up, take some answers here. It's so hard to use this sometimes, so I apologize, everybody. Just speak up if you're on. I'm trying to.
I got a question. Hey,
okay, go ahead.
Go first.
Howard, it's your friend Greg here. I am looking at some stuff that I've owned for a long time that's been absolutely hammered. Maybe stuff that I can't recall if it's in your 8 to 80, but Shop.
Well, give me a name.
Sorry?
Give me a name.
Shopify. SE.
Bought some today. I bought some at the close today.
Square, so I'm looking at these names that obviously, Spotify, another one that I know you like, and, we've all owned these for a long time, and they're getting to these levels, and I'm like, well, is there a huge another flush coming? And I'm watching the mega caps, and I'm fine if the mega caps fall, 20%, I'll load up on Apple and Google, but kind of just wondering how you're thinking about some of these that have broken their 200 day and what you're thinking. Are you adding to them or just kind of sitting on the sidelines for further flush? Thanks a lot.
Okay. So I'm only speaking for myself. So I'm very light equities that I've been saying for a year because I'm very barbelled to cash and to venture. But I love talking about stocks, and I try and talk as if I were always between 50 and 80% long. Because what would I do if I was normal when I wasn't doing VC? And I was never 100% long stocks because I'm Canadian and scared of my own shadow. But in a world that I think if I was a good investor, already I would have been selling on the way up. And I think for people that I build model portfolios for on the side, I'm at about 65% long, which I feel is still too long, especially in the growth names that I like, because I don't buy Exxon and I don't buy indexes. So, my 8 to 80 names, which is like Nike, McDonald's, MasterCard, Shopify, Zoom, Bitcoin, Ethereum. I'm trying to think of some other names. It's been horrific. Even to be 65% long, I'm falling more than the markets. So you have to make a decision here how much pain you want to go that you're willing to look at, because the market's just not going to ring a bell at the top and the bottom. And so as the market falls, you have to buy better companies, not weaker companies. So you have to buy companies that are truly dominant. So that's why today Cloudflare and Shopify were on my list. Could they drop another 30 or 40%? Absolutely. But am I going to lose sleep over that? Or in essence, am I hoping that they drop another 20 or 30%, because that means the market's definitely falling a lot as well? And so those are just the things that you have to decide. There's just no perfect answer when you're buying great companies, because great companies, as I always say, are perennially overvalued. Companies that aren't growing go from periods of like hatred, like Exxon, to periods where they're doing great and not going down anymore. Or Goldman Sachs, like they go through periods because they're not growing where they truly get hated and go down. Whereas growth companies go through these periods where they go from extremely overvalued to just overvalued, and they're always scary because they're overvalued even if they're down 50%. So again, there's just no easy way to do this other than thinking, what would I do if I'm scared now? What would I do if the company that I love that I'm buying today were down another 30%? And you got to be honest with that answer, and that's how you buy growth stocks. And if you're not, you do the same thing with the QQQ. You just say, I'm going to be 65% long here in the QQQ, and every 5% down, I'm going to add another 5%. And at some point, you're fully invested. All right, next question. Just chime in.
Hey, Howard, since you're talking about Canada, I thought I'd jump in, and awesome to see you backing up the bus on Shopify and Cloudflare.
Who is this?
It's Chris Albinson, your man up north.
Hey, buddy.
Good to hear your voice.
Where are you?
I'm up in Canada, as one should, which was part of my question for you. Crazy year up here last year, $15 billion invested on venture, most ever, sort of 10x what we'd normally see. And there's this kind of an interesting rotation out of the U.S. a little bit, and sort of just kind of curious your thoughts on where the U.S. sits in the world. Where else would you put money outside the United States these days? But sounds like Cloudflare and Shopify hit the list today.
Yeah, and I'm in a text relationship with Matt. So we're friendly in that way. We don't talk about the stock. I just give him shit, and then he gives me shit. And I've had, when you hear Matthew or Michelle speak about the company, and then you actually see the results of the company. I mean, they are an international company. So I always tell people, like, when going gets tough, and I got stopped at a lot of my growth international stocks 40% ago, you got to go U.S. You got to go to the markets that, even though we make fun of Congress and the insider trading and the institutionalization of trading and all these companies, Apple's an international company. I'd rather own an Apple in a bad market than an international company. So I still think in periods of chaos that it's hard for me to go outside the U.S. And I'm different. I don't trust Canada. I don't trust the people of Canada. Right? Not that I don't trust them personally. The behavior of the country in the succession to the government, or just like the rolling over to the government, is really uncomfortable to me. As a Canadian myself, I would like to think that my friends would be fighting to say, this is silly. Like, we got health care. Tell us the truth. Like, if we're out of beds, we're out of beds. But like, why are we shut down still? And instead it just feels like Toronto's shut down.
Yeah, they're out of beds, but it'll be better in 6 weeks. It'll be fine.
I mean, I'm really hoping that this just gets better. If you shut down the country, we need to see some results. But 2 years in, so I mean, in U.S. to me is still, if you want to go to Florida, you go to Florida. If you want to go to Phoenix, which is a little bit less crazy than Florida, you go to Phoenix. If you want lockstones, you go to New York. You know what I mean? Like, there's something for everybody, and that's what still makes America great. It's imperfect. But in a time of chaos, our imperfections are better than anybody else's. So I don't know. I kind of lean in where I really like the idea of Europe with crypto and blockchain. But then when I see how they're reacting to COVID and, it's hard to trust international. Are you just focused on any one area, or are you just late stage growth still?
Late stage growth largely, but I was also kind of thinking about a little bit on the public side. I think one of the Trump effects that's been net positive for Canada is everyone's talking about Florida and Texas, but, very quietly, Canada is now the second largest innovation ecosystem on the planet and the fastest growing by 4x, a little over 200,000 tech workers and 15 billion in. And as you point out, with companies like Shopify and Cloudflare, very much building for the world, but being able to kind of recruit and bring people in globally. So I'm long Canada and I'm long India. This is sort of the short answer.
Yeah, and I think you have the capital to make those bets. Like as a seed investor, I just think if you can't find good deals in the U.S., you're just not doing your work. God bless people who want to do India and Canada. I've passed on Wealthsimple stupidly. So certain industries like you say, like Shopify, Wealthsimple, certain enterprise software companies have done a phenomenal job in Canada. Now you've got VCs there like Matt Golden and yourself. So I'm excited. It's exciting, but at the same time, I went to Toronto to see my mom for the first time in 2 years, and it just felt like Russia at many levels. And I was just like, why are we putting up with that? I don't know. I've always felt that way. Like you go into Billy Bishop Airport and it feels amazing, and like you're in Canada and it was like a bing, bang, boom. But like you go to Air Canada and it feels like I'm fucking in the Middle East sometimes. Like, I don't know. Like it just feels like...
The weird thing this year, that $15.4 billion that came in over the last 12 months, 81% of that's U.S. funds, right? So like the U.S. guys are here in a pretty meaningful way. All the top 10 funds are now pretty active.
As they should be, because there's talent there. I just think as a seed investor, and again, I defer to Matt Golden, who literally just does seed investing, mostly in Canada, and I don't want to compete with guys who own the market, especially what I think is not as big a market, is that, you hope you build a relationship with the people who are good there and they show you the deals that they think you can do. And, Matt and I talk about fintech deals all the time. And, that's how I prefer to work in those countries. And I think in the public market, so going back to your question, I think you can get access to Canada via Shopify, right? You can get access to Canada via Apple and Google. So that's kind of where my head is. All right, let me take a few more questions.
Yeah, I'll get
anytime, but I'm so glad that you chimed in here.
Can I ask you a quick question?
Yeah, of course. Who is this?
Yeah, this is We Live to Serve. The boring guy. Hey, I'm curious, because you brought it up, but I want your thoughts on the evolution of capital formation and governance, because when you're talking about these seed startups without a proper board, I think it's been a long time since we've had a reminder of terrible governance in public markets. It feels like it's a big vulnerability. And then you throw in the capital formation and entity formation that crypto allows for. I guess I'd like your take on what's the optimal forward-looking structure for assembling capital, and then for governance from the point of view of just responsibly stewarding the business.
Well, it's a broad question. For me personally, and we're I've just been to the rodeo enough times that if you don't do business, again, the VC, the angel business has evolved so quickly and so efficiently to a point where you have notes and you have generally accepted, paperwork that you have to start working with it, ask questions occasionally, but start working with it. I feel like we've gotten to the point where in 2005, 2006, the VCs had all the power. And in 2021, 2022, the founders have all the power. And for some reason, for some people that's important, and for other people that's dangerous. So the pendulum has swung too far because of the money printed and because of the new people that, from the bull market, and because tech is so distributed and it's come out of San Francisco and is all around the world. And then you got blockchain and everybody thinks they're an expert because stocks have been going up. It's no one person's fault. But in a time like that, I'd rather pay up for expertise, and which means you're going to do less and less business, which means eventually you just slow down, and the market kind of does it. In the public markets, price takes you out. In the private markets, behavior and price and, not generally accepted things take you out, because in the private markets, you're making 10-year decisions, at least where I'm doing. In the public markets, I could be making 10-minute decisions. So I think there's too many choices. I think we're way ahead of ourselves with DAOs and with crypto, at least in terms of like how many people are really using it. And so I think we're still in the infrastructure phase of crypto, and so all the other stuff is just not important to me. And so everybody ran over, and it's like 6-year-olds playing soccer. Everybody chases the ball, and no one's no one's running to open field. And I'm trying to think like the 10-year-old in the 6-year-old soccer game, going, man, if they're all going over there and somehow the ball gets kicked to me over here, by the time they all get me, I'm on a breakaway. So it's really frustrating the last 2 years to just say, hey, man, I'm over here if you want to talk. What you're going to get with us, right? You're going to get like standard boring stuff. But if you do your job, we know what we're doing. And if you do your job, we can guarantee that you're going to get an A round done, and there's going to be interest in a B round. Meaning if you build the product and recruit well, social leverage can help do the rest for you, take the money raising out of your hand. And in a world where everybody thinks they can raise money, well, we're just not that valuable to people. So you either run to where everybody's going, or you stand over here and look for open field, because eventually the ball just shows up. And so that's what we've been doing. I don't think you can tell other people what to do, but I can tell other people what I'm seeing. So hopefully that's as best as I can do. And we're trying not to go where everybody's going right now. Doesn't mean I don't want to participate there, and I've put money over in that place, but I don't want to be the guy that has to report to my LPs about stuff that I don't really understand. I'm okay to be the dumb guy that invests at the top with my own money, but I don't want to be the guy stewarding other people's capital when everybody's crowded around the ball.
Be the hedgehog. Love it. Yeah, it does a lot. And also, I hope you get your headphones. It's a nice set of headphones.
Oh, is that you that sent them? There was no, dude, I'm looking at them right now. It came in, thank you so much. It came in a box with no name on it.
You need to have them. Yeah, well, that's what she said, but yeah, they're great. Check them out. They're the ones Fred and I use. So
okay, it was a great gift. I didn't see your name on them, so I apologize for not.
I don't think I did. I figured at some point I'd catch you on a call or Twitter or whatever. So
okay, be well. Next question, fire away. Ram?
Hey, can I jump in
Steve,
here
are you there?
real quick on something?
Yeah.
Sorry, I did not mean to interrupt by any means. Whoever jumped in front of me, feel free to go ahead.
Go ahead, you got me. Go ahead.
Sure, I just had a question. Based on the crypto topic, we're sort of in a place now where everyone's trying to figure out what's going to happen. In a what's next phase, do you think this becomes a bit of like a bubble and something pops and then we revisit this in a few years? Or do we move towards a mass adoption stage and the time to come? Just curious your thoughts on what eventually happens, especially with regulation. Thank you. And I love StockTwits.
Thank you. Well, mass adoption. So here's what I look at. Like, what is the Netscape browser? And, to me, that's like the stuff that's being priced like what Netscape browser was being priced. And, when Mark Andreessen had the browser, the closest thing to that right now, and just like a lot of smart people have gotten me to this point, is a MetaMask and Phantom Wallet and Coinbase Wallet and Robinhood potentially with their wallet. And those are the new Netscape. And I think Kyle Samani has said stuff like this too at Multicoin. So I'm only quoting other people, but it really makes sense to me when you think about we have to have the Netscape moment, because the browser was the internet's Netscape moment. So crypto's Netscape moment is when it becomes easy to set up a wallet and transact somehow. And that could be Apple Pay, it could be Shopify, and because I'm still not using OpenSea and MetaMask in any material way. And so if I'm an early adopter and not really using this stuff, I'm either the old guy, which is definitely a possibility, but if I'm the old guy and my kids aren't using a MetaMask and my daughter seems to be forward thinking and not using Coinbase Wallet and still using Robinhood, then I think we're way ahead in terms of price of where we're at. So I'm just being careful. And if the wallet's not the browser, then we're fucked. Then we're really way ahead, because MetaMask is out there raising money at a $6 billion valuation, and even accounted for inflation and for everything else. I don't know. Netscape definitely felt like the thing. And to me, even though I get the idea of the wallet being the thing, if that is the thing, we're still way early, which is great if you're just getting into it, which I think is great. You just have to be careful about where we're at. So I think mass adoption, we're not close. Coinbase just launched their wallet. Robinhood hasn't even launched their wallet. People are trading AMC and GME, which basically are the real world version of crypto still right now. Tesla is Bitcoin, and GameStop and AMC are a shitcoin. And so people are fake playing what everybody in the crypto world wants us to believe is crypto. So we're so far away from it that you can call it a bubble or you can call it hype. But the good news is there was so much money printed that at least we're talking about it. But for everybody in Discord talking about the metaverse, I kind of chuckle because shouldn't guys like me be over there and playing with it every minute? So I think we're just way ahead of ourselves here.
How do you feel about a stable coin?
Well, stablecoins seem to be very important to all this, but shouldn't everybody have a stablecoin? Shouldn't Apple or Google have a stablecoin where I can just go on OpenSea and pay with Apple Cash? So again, like I don't fully get why I need to use crypto, and I'm trying not to be mean, but at the same time, I don't know why I've made so much money in the space. So I'm along for the ride going, why am I so lucky? And so partly because of the fact that I'm doing well makes me skeptical. And hopefully I'm wrong. Like it would be one of the greatest times ever that I'm wrong, but I'm pretty skeptical about where we are versus the usability of these. Two more questions. Next up.
Yeah, Howard, I was just jumping in there prior to the person before, and I appreciate you taking the time on this live podcast. It's greatly appreciated. I had a question for you about a specific stock, if that's all right.
Try me. Can't guarantee it.
So got in very, very early on DocuSign and pre-IPO, basically. And I don't know if I'm just attached to this thing or what, but I just can't comprehend how the stock itself is trading at 130. It maxed out at 330. I guess it closed at 314 one day. Kathy Woods hopefully is finally out of this thing. I guess in 29 minutes we can all figure out if she's finally sold her position or not, which I'm hoping is good for volatility, if nothing else. The CEO in the last 30 days has bought $10 million worth of the stock, and I'm just having a real hard time understanding why it just keeps getting beaten down like it does, and wanted to see if you have any insight on that.
If someone gives you the insight, don't trust them. That's about all I can tell you. These are pieces of paper. It's a great company. There are hundreds of great companies that have been massively overvalued in the last year and now scaring the hell out of people. So like I was saying early on with I think Jason and with Chris, is like you go from the great companies go from severely overvalued to just regular overvalued. And, we finally gotten to the point where these things are just, unfortunately, still regularly overvalued. And now it's about execution and growing into these valuations. So, DocuSign's a leader. It kind of owns the market. People like my wife who are in real estate live on it. She's just a brand new subscriber to DocuSign. So I'm saying that's one where it's still early days, but I can't comment on the valuation. I don't love the product, but I use it all the time. But they seem to be dominating the market. So if the market continues to go down, this DocuSign will go down slower than the rest of the market. And now it's up to them to grow the company. But I can't comment on, I don't own the stock, so I can't really comment. But at the same time, we're just in this period where we're finding out that a lot of people own the stock for reasons that they don't know. And, you seem to be caught up in that boat. So you just got for me with stocks, it's just about how much pain can you take and how much do you put in one stock, and you know, if it's causing any kind of like mental anxiety, then you own too much of it, because these things really are just, you know, tied to earnings and cash flow in the end. And right now, even with the sell-off, they're all massively overvalued by any fundamental, you know, textbook valuation. So, you know, I can't really help you there, but I mean, I love the company.
Can I ask you just one other aspect of this? So they partnered up with Salesforce, and I feel that could be good, hopefully good, possibly negative, in that totally hypothetical numbers. Let's say next quarter they're saying they're going to sign up an extra 10,000 people, and they end up signing up an extra 20,000 people due to the Salesforce partnership, but they're at a lower rate. So instead of making
I got you. It's a great,
right, they're making $9,000.
yeah. I mean, it's a great question. That stuff, unfortunately for me, you know, I don't get into the specifics of it. I mean, that's their job, is to go hammer out those deals and make sure that they're good deals. But I just can't dive that deep into one stock. I gotta hop onto a few more questions here. Hey,
All right.
yeah, thanks.
Thank you very much. I really appreciate it.
Let's just talk quickly about the market. Brian, are you there, Lund?
Hey, Howard.
Yeah, so Brian and Steve, so quickly before I hop off, let's just quickly talk technically, and Fahmy can hop up, and let me invite Fahmy. Let's just talk to the old school market guys who I don't get a chance to talk to that often. So dial me in. You know, the chart that I saw that's most interesting to me, and there's so many great writers on the internet doing this stuff, and now we're finally getting to the point where I'm trying to figure out how bad can it get, right? Like a couple days ago, Goldman said there's going to be 4 interest rates. Hey, Joe, a couple days ago, Goldman comes out and says there's going to be 4 rate hikes, which is, to me, it's like funny because they're like creating a panic. And I figured, well, that'll be a short-term bottom, but then we're taking out those lows today. And then I see a chart of like, you really start seeing a chart of how like the money supply has really been tied to this run in the S&P. And so we haven't even really started going down yet. So where is your, like, how do you look at the market today? Where are we?
Well, you know, I look at it obviously as a trader. I don't look at it
as a
long-term
trader,
investor.
What can go wrong and what needs to go right?
So I've heard on this call the same theme that I'm hearing from a lot of people, and they say it's a great company. Why is it going down? But the fundamental story on a company, it only applies to the long term. Right? It doesn't apply to the short term. And I know it sounds so cliche and it sounds so basic and everybody wants a more complex explanation, but you know, money was really cheap, right? And so cheap money drives prices higher, drives multiples higher, and now money's coming out of the system and there's just more sellers than there are buyers. And so when someone says, well, you know, hey, they just had this partnership with this company or they've got this, that's great. And maybe in 2 years or 5 years, that's going to play out. But if they're you know, if they're trading or they're investing on a shorter intermediate term, it's not going to make any difference. And I see a lot of people getting their heads handed to them just because they can't reconcile the difference between a good stock and a good company and a short time frame and a long time frame.
Okay, and Joe, are you there, Fahmy?
Yes, I am.
All right, the Egyptian magician. Brian, it's great to see you, man, and talk to you. These are the guys. Hey, buddy. I was seeing, Joe, I saw you today chime in about the distribution. We're in this period where, like Brian just said it, there's just massive institutional selling that's accelerating, whether it's Kathy or whoever. So when you see that kind of distribution and selling, what do you tell people?
I tell people to be defensive and to protect capital. I know Brian was talking about, I just hopped on now, so I don't you know, first time caller, long time listener. So thanks for having me on. But seriously, one thing is important what Brian said about time frame. It really depends on your time frame, but also to your point about the Fed accommodation, it's something that, especially for new traders, I want to stress it is really important to pay attention to what the Fed is doing. And in 2018, October of 18, Fed Chair Powell says we're going to raise rates 3 or 4 times. And the S&P corrected 10% right into December. And the market was like begging for some sort of relief. And he came out in middle of December in that Fed meeting and said, nope, we're still on schedule. And in fact, we're going to reduce the balance sheet. And the market dropped another 10% right into that right before Christmas
But
low
that was also
in December.
down the government, like in the midst of all that, Apple was crashing because Trump was like fucking with the government. Remember, he did a shutdown in the middle of this.
But why Apple and Amazon and Nvidia and all of them got killed is because when big institutions have to sell, they have to sell their most liquid assets.
Mm-hmm.
So then the market gets smoked 20%. He comes out early January and he says, okay, the Powell pivot, we're rethinking about this. So now the big question is the market believing this or not?
Correct.
Because they've seen this pattern before.
Mm-hmm.
So are they just trying to talk down the markets and say, yep, we're going to keep raising rates, we're going to reduce the balance sheet and just be hawkish, and then is the market buying that they're actually going to raise rates or not? And that's the big question, and why I'm basically saying to just don't overthink it, just stay defensive until healthier conditions show up, because the big institutions are still selling, and you really don't know if this is going to turn into a bigger correction or not, but at least wait for some of the selling to slow down.
Correct. That's why I called this a market crash. Is it happening? The MIM economy is teetering because in a world where institutions are saying, listen, until you're guilty until proven innocent, they're going to go at a fringe. And what they were doing the last 2 weeks was buying Apple, Microsoft, Nvidia, Google, and whatever they whatever they could do to keep the cash in the market, right? And now it feels like they're now potentially walking away from that last bastion, which will lead to some real selling. And in real selling, nothing makes sense. So that's where you have to be careful here, I feel like.
Real quick, another factor is the difference between now and 18 is inflation was not a factor back then.
Very good point.
So that's another challenge for the Fed. Is inflation is whatever rates, levels we haven't seen since the 80s. So that is a big factor. So do you want to cut down inflation to help the certain, whatever, maybe even voters, because there's a midterm election, so that's another potential factor. Right. Or do you want to hurt the market? So there's so many variables at play, and rather than trying to guess and go crazy thinking about all these things, just if you're a trader, you got to cut down position size and raise a little bit of cash just in case this gets worse.
And Joe brings up a really good point that I don't think a lot of new traders understand, and that is market mechanics, right? Because selling begets more selling. So if you get these big funds that have to liquidate, they're going to throw everything out, and then the market feeds on itself. And I feel a little bit of that right now, but we're definitely not at the point where it's like a cascading effect. But that's something that definitely can happen in the market as they sell what they have to, and it spreads into other names that are maybe, otherwise good names. And I think that's what we're going to see in crypto eventually. When the crypto market ultimately implodes, we're just going to see that sort of snowball effect when everyone goes to the door.
And that's why I did the space. Now it took me an hour to get here because I didn't know how to use spaces, but I really wanted to just talk to you and JC and John Street, and glad you guys showed up. But this is the mechanic. We're at the mechanic phase. It has nothing to do with fundamentals. It's everything to do with the Fed. You could see this happening, and now the only question is, does it cascade? You have to have cash for the cascade, and that's what I've been trying to tell people. I haven't been able to verbalize it well, but today was the first day where I felt, all right, there's no reason to panic. It might be too late. But if you don't have cash now, you may have missed a good opportunity to sell, because the Fed is it feels like the Fed's cornered because of what Joe said. Inflation, 7% inflation. You got structural issues. The voting is the one thing that definitely matters. You've got Congress trades. You got, everybody hates the market for whatever reason, and no one wants to save it. You get into this thing where the one time they don't want to save it, and that's the time you're doubling down on overvalued, even though they may be great companies. And, listen, I bought some Shopify today at $1,000. It's not cheap. So why can't it be $700, And if you don't have that planned in, you really end up in trouble.
Can I play devil's advocate and just make 2 points? So, like you spoke about the dichotomy that we're seeing
Who is it?
between public and private. It's Steve.
Straza.
You talked about the dichotomy between public and private markets right now. Very much is going on, but it's happening in public markets between, these speculative pockets of the stock market and then the value stocks. We're talking about stocks crashing right now. Energy stocks are making new highs. Financials are breaking out to all-time highs. Banks are going crazy. Yields are making new highs, not just in the U.S., but around the world. Look at developed Europe. Really bullish action. And we're talking about, everything that's not working. Yeah, it's concerning. And there's no evidence that these speculative areas are turning around just yet.
But Steve, everybody that listen, 90-year-old people and 70-year-old upper middle class are loving the blue pill market. I'm not arguing with that, but no one owns those stocks. I mean, sorry, no, right. I am wrong. Everybody owns those stocks, luckily, because they own Vanguard. But what I'm saying is, those get sold here at the end. And that's when the S&P catches up to what's already happened in the growth names, right? When they pull the plug, they sell the S&P and they sell the futures. And then even the Pfizers and the fucking Goldmans go down 20%. And then the growth stocks drop 3% more. So what I'm saying is it just feels like one of those moments. And by the way, I don't want to own those companies, and for those people, they should own indexes. If you're trying to play rotation from growth to value, you really need to, you obviously do this full time, which is fine. But for the regular home gamer who should be in indexes, this is, the most questions I'm getting are from people that really should just be in indexes because they just haven't seen this before.
But isn't there an argument we could make that, there's already been a bear market?
Oh, no, get me
ARK is in a 50% drawdown.
I just said the markets are teetering because they're not listening to the tape, right? They're not listening to the Fed being cornered, like Joe's saying, and the distribution in the market. Listen, the S&P is doing fine. If you own the S&P, and the QQQs are doing fine until the last week if you own the QQQs, but it can catch up really fast at the end. And so you got to have a
no, Steve. Steve.
Twitter space right now. Not that people should panic, but prepare yourself for if it did. What would you do?
Yeah, Steve, you make a good.
And yesterday, I quoted you guys by saying how to try and make money in the rising interest rate environment, but I didn't mean go 100% into ETFs that benefit from an interest rate rise, because in a bad market they all go down.
Yeah, that's the point I wanted to hammer. What Howard said, Steve. You make a good point that there's a lot of sectors, whether it's utilities, banks, that are doing well, but all the sectors that are doing well are all defensive. Yeah. So that's screaming to be defensive when defensive sectors are leading. And those are for the money managers that have to stay invested.
If you listen to all the
now, Howard makes an...
They're all from people who own growth stocks that are still growth stocks.
Yeah,
fucking annihilated because they weren't as...
Most people own growth stocks. And on top of it, to Howard's point, that when they eventually start selling everything, it gets to everything.
Yeah. And
that could potentially happen, and you have to watch out for that.
The question is, does it really happen? I don't know. We're on the verge of it happening. That's just but I hope I'm wrong. The good news of talking it out is I want to have a plan, because if it really happens, I think we're close to a bottom, because you'll get this 10-15% move down in the S&P that catches up to all the broken growth names, and then you got to start stock picking again. But
no,
but
yeah, I just wanted to play devil's advocate. I don't disagree with anything you guys are saying. I just feel like if you wanted to short some of these weaker areas, the easy short was last year. That time has passed. I don't know if you want to press a short in ARK down 50% or Peloton down 80%, while financials and energies.
No, I'm saying you can't have these moves down without the rest of the market catching up. I hope I'm wrong, and that's what I'm feeling.
Yeah.
I'm not saying you should short Peloton or even the S&P. I'm just saying it feels crashy because everything that mattered crashed, at least that mattered to the meme economy, other than Tesla, which is the only real meme economy stock. Because even GameStop looks like it could end up at 50 in a week, and AMC could be back at 10 in a week. It has that feeling, And Bitcoin has that 20,000 handle feeling on it. And Ethereum has that low 2,000 handle feeling in it, because that's what will happen. And
you're seeing it, kind of move into the
large and mega cap growth
So I
stocks.
wouldn't
They were
Microsoft.
completely
That's a
unaffected
big
at
move.
first.
Microsoft kicking ass.
Yeah.
So I'm not saying it's not overvalued, but that's 5% move in Microsoft's a real move. You know.
Right, and those were the names that were holding up.
Yes, and Apple seems to be holding up the best, but they'll come. And that's what I'm saying. That's the only point here. So we're all on the same page. It seems like all of us who I wanted to talk to are kind of on the same page. And so I'm going to end it right there. Thanks, everybody, for listening. Joe, great to talk to you. Steve, okay to talk to you.
No, thank you, Howard.
Ryan, great to talk to
Thank
you.
you.
I see Frank Z is in the room and Ari Newman. Sorry I didn't get and Doug. I see Doug here. Anyway, it's good to see all my friends and waiting in. I'll get better at these Twitter Spaces, but I think the audio of Twitter Spaces is cool, especially at moments like this when we can talk to a bunch of people who have been through this stuff before. So I appreciate you guys chiming in. See everybody on the streams.
Bye, guys.
Goodbye.